Greetings and welcome to Growth Hacking Secrets. I'm your host Mohammed Siddique from Atlanta, Georgia, and the co-author of New Success Secrets available on Amazon. On this episode, we have a special guest, Venkat Avasarala. Venkat is a multifamily syndicator, commercial real estate developer, and he has a portfolio of over 3,000 doors with $400 million in multiple states, Texas, Colorado, and Arizona. Please join me to give a warm welcome to our guest, Venkat Avasarala. Venkat, welcome.
Thanks, Siddique. Thanks for having me.
Thank you so much. Let me start with this. Where were you? What happened? Who you were surrounded with that inspired you to get into multifamily, especially the syndication and real estate development and big portfolio and managing everybody else? This was your dream, or this was, oh my God, I just kind of jumped into this?
No, it's just a necessity, right? I mean, I'm an IT guy. I worked 14 years in corporate IT, gave up my IT job back in 2018, not too long ago, actually, about 3 years back, and doing full-time real estate. But yeah, I started in 2007 buying single-family homes, and that's what I was doing until 2015 with my own money. But then I tapped out on the agency loans that I can get. So I wanted to do more for financial independence, right? Not that I hate my job or anything like that, but I just definitely want to not completely depend on my job. So that is why I got into real estate. Then I started syndicating multifamily, put myself in the company of the right people who have done this so many times before. This is not rocket science. It's completely, your growth is driven by the quality of the connections that you have, right? It's as simple as that. Everything else is just paperwork. Right. So I did that. And then I started buying these multifamily properties in a syndication fashion because you need millions of dollars, which I don't have to put down on each of these properties. So I started syndicating them.
Oh, I thought that you're a $400 million guy. So I
wouldn't be here if I'm a $400 million guy, But yeah, those are assets under management. So I did acquire about 3,000 units. Still holding 2,600 units, mostly in Dallas, but have properties in Arizona and Colorado as well. But early last year, got my feet wet with ground up development also. So I was pivoting, just like I pivoted from single family to multifamily. I'm now pivoting from multifamily existing to multifamily ground up construction. Again, to generate higher IRRs for my investors. And that gives me better risk to reward ratio investments.
Wonderful. Now you are landing at the right spot because real estate development is everything when it comes to real estate, because they are who creates a big bucks for everybody involved.
Absolutely.
Yeah. So I was on your site. I was moved by your statement where it says, let's build wealth together. Is that really together? It's only for the certain people and everybody else make a little money? Because I just want to say everybody says that, so people.
Absolutely. Yeah. I mean, that can be quickly checked by looking at the offering documents, how we set up deals, right? So I personally push my investors ahead. If I do not make money on this deal, that's fine. I do a lot of deals I'll make on something else. But there is this one investor who wrote me $100,000 check. If he do not make money on this deal, guess what's happening? His 100,000 is just dead capital for him. He has 100% impact, right? So that is the way I see it. And what we do is usually we push investors ahead of the capital stack, so of the cap table. So what that means is when we do sell the property or when we do generate the cash distribution, we set up a preferred return for them. So until they get paid that, we don't get paid anything on the back end. And even after that, we put something like 70-30 in the favor of LPs, 80-20 in the favor of investors, just to make sure that they get paid what they have to get paid. And whatever is left, that goes to GP. But if the deal doesn't perform, guess who's not going to get paid? The GP. And that's okay. And sometimes that happens, that's okay. But the investor has to get paid because they're trusting us and giving us their hard-earned money. They could have invested anywhere else, but no, they chose you.
Yeah.
They gave it to you. Right?
Yeah. So, Venkat, this is great. I'm glad I got that clarification right up front. So, that's why you need to keep watching this because there's a lot more to cover. So what are the top 3 mistakes that typically investors do when they try to pick up to work with a syndicator, multifamily syndicator, because there are so many of them. And as you said, they could have invested anywhere. So what are the top 3 mistakes they do when they choose?
So what I see is investors constantly gravitate towards what's they're reading in the headlines, right?
Yeah.
And what's popular, right? Oh, I hear this 4 different areas that this is the right thing to do. Okay, I'm going to put my money in it, right? But think about it, right? If you are going after something popular, everybody is going after that. They're going to kill it. Yes, it was a deal at once upon a time, but now 100 people fell on that and they killed it, right?
Yeah.
They killed the elephant. So you gotta think a little bit alternative, right? So you have to invest your time and time spent with a syndicator and understand their frame of mind and see how can I generate better risk adjusted returns rather than just doing the popular thing and settling for a paltry returns. Right. So that's one thing. And the second thing is people just investors, right? I mean, they need to get a little bit more sophisticated and to understand the underwriting. Especially my investors are all IT guys, doctors, very accomplished people. What I do is very rudimentary, right? Not even 1% of the intellect that they use on their day jobs. But when I try to pitch my underwriting, they're like, oh, stop, right? I mean, they don't want to spend any brain power on that, but they should, right? They should understand what are the components which goes into the underwriting, what is its significance. So that would be the second thing, right? Investors not spending time to get sophisticated by underwriting, by understanding the underwriting. They don't have to underwrite anything. They just have to understand what I wrote, so that once they see a few deals, they can say that, you know what, this makes sense, this doesn't make sense, this is just too much risk, this is too aggressive, I won't invest. They can save themselves by entering into these documents. So those are, I would say.
One more.
Oh, absolutely. So the other thing is definitely when you invest, right? It's 401k, right? So if you see what quality of the discussions that they do is quality of the investments that they do in 401k. Like I'm guilty myself, right? When I used to work on a W-2 job, I used to say that, okay, what are the top 10 investments which produced most return last year? It's like check, done. But if I have to go buy a car, I'll spend like 2 weeks researching the car, right? I mean, that's just us. I mean, we have to get out of it. And I'm saying this in the context of when I try to show my investors deals in Arizona and Colorado, because, hey, I have seen that this offers a better risk reward ratio for our investments. My Texas investors say, you know what, I want to invest close to home. So get out of that, try not to gravitate towards the popular things and easy things, right? Educate myself. And there is a reason why I'm saying that we have to go to Arizona and Colorado. It's easy for me if I'm buying I live in Dallas. It's so easy for me if I buy in Dallas, but no, I want to buy over there at this time. And there is a reason for it. So what I would say is that the mistake is not to research the metros that your sponsor wants you to take you into, but just be a little bit open-minded. So I would say.
Be an open-minded, right? With the intentional listening. Yeah. Venkat is great. You're not as good as you think. You're better. So you're sharing with us a real wisdom. So how we can all make an informed decision on our investment, because it's hard-earned money, paid a lot of taxes before I gave it to you. So this is great. So Venkat, I'm sure it was never like that when you started. So I want you to share your greatest failure in multifamily or in real estate. What did you learn from it, and how did you recover from that?
Well, I'm still recovering from it. I did not lose any money, so that's a good thing. But I kind of lost a lot of opportunity, right? One thing I did is that I was bought into this idea that interest rates are going up. And I have almost all my properties, I put a 12-year agency debt with a prepayment on it. So, and you know what happened, right? The interest rates crashed. So my business plan was always 3 to 5 years. Hey, buy, hold it for 3 to 5 years, generate the cash flow, distribute to investors, and sell it and distribute the profits to investors. Very straightforward, right? So I have no business on putting that long debt. And I should stop thinking like I'm an oracle, right? I mean, I am no oracle. Why am I thinking, right? So if you want to get a loan, go get a loan just for the period that you want to hold the property, and maybe 1 year more. That's it, right? But I didn't do that. I tried to predict that, you know what, these interest rates are going to go up. And now I'm stuck in those long-term loans and can't take advantage of these lower interest rate loans where I can get more for my properties when I sell them. So that's a major mistake. I I mean, I can't even think about how many tens of millions that's going to cost across my portfolio.
Yeah, definitely. And what did you learn now from this?
Well, what I learned is like, just again, stick to the plan, right? Stick to the plan. If you want 3 to 5 years loan, then get a 3 to 5 years loan. Don't go better. And
Yeah.
also another thing is the reversion cap rates, right? Again, I had a mentor. So, I mean, I wouldn't be here without that mentor. But at the same time, that mentors are not gods, right? I mean, you have to have free thinking too. So this particular mentor used to advise us that, hey, you need to leave a 200 basis points, difference between the entry cap rate and the exit cap rate. And what happens is like, if you keep doing that, if the whole market is only allowing 50 basis point and I am allowing 200, thinking myself, well, you know what, I'm being super, conservative. What happens is you cannot buy the best deals.
Yeah.
You will miss the opportunity. You are denied the opportunity to buy the best deals by leaving that much spread, thinking all the time, oh, I'm being conservative. I'm being conservative. Yeah, you are conservative, but you're losing the best deals in the best areas.
Yeah.
Those are the properties where you should be holding
Mhm.
to be conservative,
Mhm.
right? Everything else is a little volatile. But see,
Yeah.
that's another learning.
And how did you recover from that now?
Well, I just corrected my underwriting, right? I mean, you can't go back in time, correct all those things. But over the last year and a half or so, I have, as I come to realization, as I realized this, then I corrected my underwriting.
Wonderful. So Venkat, let's switch the side and let's talk about your successes. So as a real estate investor, when they're getting into a syndication, and multifamily is considered to be very safe and it's like steady returns for the investors. So what are the top 3 success traits for real estate investor to consider to be a part of a syndication?
Absolutely. So, see, syndication is just very straightforward, right? You are pooling people's money, but you are playing by the rules laid out by SEC under Regulation D, 506 B and C usually, but there are other ways also. But still, at the end of the day, you're playing by the rules so that you don't just give your money to the guy in the street who just send you a one pager to sign and you're in it, right? I mean, let's not do that, right? So that's syndication. Now, that using those syndication funds, you can go into different asset classes, right? So the first thing I would say is to pay attention to the market cycles. Every particular asset type will not perform the same way for a prolonged period, right? Hotels, 2011, the best time to buy. But everybody's scared because we were not out of the recession. But everybody who bought hotels in 2011, they were like 4-bagger, 5-bagger, right? Just 3 to 4 years after, right? So think opportunistic, right? Think opportunistic and go work with that syndicator who has a good understanding of macro and microeconomics and who is flexible enough to see a little 2 to 3 years horizon and what will perform and then get into those assets right now. I'm saying this in the context that, multifamily prices have risen by a lot. Like in some markets like Dallas, people used to buy 20,000 a unit and not too long ago, 2012. This is not ancient history. So they have risen from 20,000 a door all the way to 100, 120 now. Rents have not risen that much. So if you go buy yourself a Texas multifamily, and I keep saying Texas because I live in Texas, and also Texas is a good high expense ratio state where our taxes and insurance are high compared to the rest of the markets. So if you go and buy a 1970s Texas apartment complex, still it's very popular. I mean, every day I see like 10, 20 people posting on the social media that they're doing that. But, that's not a popular thing to do at this moment. As well, it's a very popular thing, but may not be a very sane thing right now. So that's why I'm into multifamily in the existing multifamily in Arizona and Colorado, because those states offer a particular advantages that no other state offers. Right? I'm happy to. It's just for the time. I'm not going deep into that, but I freely share what I know. And that's why I'm going to the ground up construction, because I'm able to generate much higher IRRs, and there is this insatiable demand from the institutions to buy these properties from us once we build them, so that they can get that 4, 5, 6% yield, which is a lot better than the 0.6 to 1.5% yield they're getting on a 10-year treasury.
Yeah.
So you got to have a mindset and see which way the world is heading and follow that.
Wonderful. That's great. So, Venkat, are you a vertically integrated company, like your management and everything else? All are you?
No, so for the property management, we use third-party management, but we have a very strong asset management, meaning like we go to properties every single day, and we only work with management companies who allows us to do that. So this way, we are getting the best of the both worlds. I mean, we can get to be very involved, and at the same time, I don't have to worry about running payrolls, benefits administration, and the whole 9 yards. And we even interview people to get in. So we are kind of getting the best of both worlds, not getting bogged down into
that's a
the
very
numbers.
that's a very smart thing. How the growth hacking secrets community people are watching this now can support you?
Growth hack secrets. Sorry.
How the people who are watching this now can support you?
Well, they can reach out to me by emailing me at Venkat, Venkat, at strikerproperties.com. It's on the email, or just they can give me a call at 281-727-9238.
Wonderful. Strikerproperties.com is a website on your screen right now. STRYKERPROPERTIES.com. Thank you so much. As we are about to wrap up, I'd like to have your quick word of testimonial for being a guest on the show. What would you say about your today's guest experience on the show?
Oh, this is short and sweet and to the point. I really like it. It's much more efficient.
Okay. Thank you so much for your kind words. Really appreciate it. Venkat, what would you say as a final word?
My final word is it's exciting time. It's a bit of a scary time. We are almost out of the woods, but not quite, right? I mean, until the last person gets vaccinated and it doesn't reoccur and all that. But just keep your ear out. This is the great time to build wealth. Never before, since the creation of this country, the government has pumped this much liquidity. I mean, mind-boggling amounts of liquidity in it. And if you position yourself right now in the right places, it's not really hard to do well for yourself financially, and maybe retire you, right? I mean, retire you. I mean, nothing is impossible anymore. Just think about Bitcoin. Again, I'm not endorsing Bitcoin and people have to go with Bitcoin, but see the possibilities, right? The way the money flows, just pay attention to that and position yourself in the right place. And it's very possible to make some real significant amounts of money at the very short time.
Yeah, see the possibilities. Thank you so much, Venkat, for sharing your wisdom with us today. On the behalf of Growth Hacking Secrets community and our entire team, we really appreciate you. This is Mohammed Siddique signing off from Atlanta, Georgia. Until the next episode, all good wishes.
Sounds good.